Consumer expectations have never been higher. But with the evolving economic and competitive pressures, it's getting harder for brands to deliver the kind of consistent, compelling experiences that keep customers loyal. Can operations and facilities leaders find ways to meet these demands while growing their footprint and ultimately drive revenue? Let's find out. Welcome to Elevating Brick and Mortar, a show that discusses the crucial role that facilities, construction, and operations play in designing and delivering a compelling customer experience. Hello, everyone. Welcome to the show. Thank you for joining us. I am here today with Tom McGee, President and CEO of ICSC. Tom, welcome.
Thanks, Sid. Great to be with you.
Tom, thanks for being here. So, for folks in our audience who might not be familiar with ICSC, can you share what ICSC is and what your purpose is?
Well, ICSC is a membership organization. We represent the marketplaces industry, which is fundamentally where everyone shops, works, dines, and plays. So think of retail real estate. We have about 55,000 members, predominantly in the U.S. and Canada. We do a whole host of things on behalf of our members. Public advocacy, public relations and media, research, but we're very well known for our large networking events. And so we have about 100 events annually, the biggest of which is in Las Vegas in May, ICSC Vegas, and we'll have close to 30,000 people at that event. And these events are really a forum for people in the industry to get together, to network, to talk about deals and how to grow their business. And so we'll host about 100,000 people, attendees at our events over the course of the year.
That's great. Yeah, I've actually been to your event, and I can speak to the high quality of the show, and I definitely enjoyed my time there. So Tom, can you share what type of companies and persona would be part of ICSC? You said marketplace, but can you elaborate a little bit more?
Sure. So we have a very diverse membership. It's pretty much anybody that participates in the commercial real estate side of retail. So think of owners, developers. Think of the retailers, the tenants themselves that occupy space in retail centers. Think of all the service providers, brokers, capital market support. Think of lawyers, attorneys. Think of banks and financial institutions and investors, private equity firms. And so it's a very diverse group of participants in membership. Pretty much anyone that participates in the commercial real estate industry with a particular focus on retail would get value out of being a member of ICSC. We also have membership across all the experiential levels as well. So everyone from somebody just entering into their professional career in the industry to someone who's been in the industry for 40 plus years, we have that covered. We have a very large focus upon what we call next generation members. So younger folks coming into the industry who are starting out their career. About half the folks that join ICSC on an annual basis are, quote, next gen members. And we've been very purposeful about that, trying to, encourage people to come into commercial real estate, into retail real estate, and have a whole host of service offerings and events and tools that help people as they are beginning their career in the industry.
I love it. That's great. I'd love to ask one more follow-up question on that, but before I do that, I'd love to hear about your journey. How did you end up in the role that you have today at ICSC, and what are you responsible for?
Well, I'll answer the last part first, which is, I, as the president and CEO, I'm ultimately responsible for, all the different service offerings and quality of what we do on behalf of our membership. So, and I do an awful lot of public speaking and public relations as well as kind of the voice of the industry. But I joined ICSC in the fall of 2015, so I'm in my 9th year in this role. Prior to that, I was a partner at Deloitte, and so I spent 26 years at Deloitte and did a whole host of different things there, including serving clients in the retail industry and the real estate industry. But I'm a CPA by background, did a lot of M&A work, and was an audit partner at Deloitte as well. And I was recruited. I had 26 wonderful years at Deloitte. I wasn't looking to leave, but I got a call from the recruiter, the executive recruiter who was responsible for this search, and I made the choice to enter on the journey at ICSC, and it's been a wonderful experience. I'm glad that I did. It's a wonderful industry full of great people. It's also a very dynamic industry. It's the
Yeah,
ultimate consumer-facing industry. It's been one that's been at the epicenter of an awful lot of change, whether it's
that's right.
the change related to e-commerce, and then obviously it was kind of really at the epicenter of the pandemic. As
Yep.
we had stay-at-home orders and so forth. And now it's on a different trajectory of really tremendous growth and strength coming out of the pandemic. And so it's been a challenging but very rewarding 9 years. And so I'm happy to be here and happy to serve our members.
That sounds fantastic. Thank you for sharing that with us. And congratulations on what sounds like an amazing journey and progression of your career. I'd love to dive deeper into the North Star of ICSC. What kind of impact are you looking to make on the space? Like you touched upon a lot of these points around the space and the industry as a whole, and the fact that it's gone through a lot of change, right? What role does ICSC want to play in that? And what kind of impact would you like to make? And what keeps you motivated to come in and do what you do?
Well, first of all, the industry is huge, right? So there's, about $6 trillion of consumer spend annually, the majority of which happens in retail centers across the U.S. Whether that's shopping or dining or going out to going to the movies, et cetera. And so the industry itself is quite significant, and obviously the U.S. economy is a consumer-driven economy. So I feel like the industry's at the intersection of all the things that are so critical to kind of American lifestyle and the American economy. I think our role in ICSC is really to help the industry continue to advance, to move forward. And so we do that in a whole host of ways, through all of our service offerings, our events, our research, our information that we share. And we're always trying to think about, what's next and what's around the corner. I spend a lot of time with our members. I make a point of traveling and going out and sitting with members, sitting with
Yeah.
them in their offices, talking to the leaders of all of our major organizations and a lot of our smaller company members as well, to really learn what's happening in the industry and the challenges and opportunities they're facing. Right now, the biggest challenge in the industry, quite frankly, is the lack of supply to meet the demand for space that exists, because there hasn't been a lot of new development, which does put, a real emphasis upon, our networking events, because people are all competing for the same space right now because there isn't a lot of it on the market. And looking for information around what's happening in the capital markets, what's the transaction flow environment, and so forth. Because while there's a lot of strength in the leasing side of the business, just the capital markets or transaction side of the business, because of the rapid change in interest rates, and just kind of trying to value things in that environment that's changed so quickly, there's a lot of uncertainty around that. So we can provide information that can be helpful to our members as they try to navigate that. What we do today might be different than what we do tomorrow, right? Because the industry changes so quickly. Certainly, omni-channel retail and e-commerce and the intersection between those two is also a fundamental kind of trend or macro trend that's impacting the industry and will for the foreseeable future. And so we share a lot of information around that and best practices around that as well.
Yeah, you said a lot of great things in that, in your answer, and I'd love to unpack a little bit of that to dive deeper. You mentioned there's a supply and demand issue right now. Like what does that mean? And like, when you look at the news today, like sometimes it can be misleading. Like, the news can say, "Hey, certain retailers are closing locations." Um, they don't necessarily say why, and there's a very logical reason as to why locations are being closed, because they just acquired a business and now they have locations that are in close proximity together, and they don't need two locations within the same mile. There could be a plethora of reasons, but it stops at hey, locations are being closed. Like, what does that mean? When you look at the data and when you look at the fact that there's a supply and demand issue, can you explain what does that mean? Like, does that mean new, like, are we, like, is there not enough brands popping up? Like, should there be more brands popping up? Or is the idea that brands will open more locations to get a wider coverage?
Yeah. Well, when I was speaking of supply and demand, I meant the supply of physical space right now
Right.
is a challenge given the demand that exists. There's a lot of demand for physical space. So let me give you kind of one series of data points. Since the great financial crisis, the U.S. economy is almost doubled in size. I mean, it's grown by about 90%. The U.S. population's grown by 11, 12%. I'm sorry, retail sales have almost doubled in that period of time. The U.S. Economy has grown by a third, 33% over that period of time. So there's been tremendous growth in the economy, tremendous growth in retail sales, tremendous growth in the population, but the amount of square footage, retail square footage in the U.S. has grown by about 6%. And so while you've had growth in retail demand and growth in the economy and growth in population, you haven't really had square footage in retail grown over that period of time. And there were a number of reasons for that. Obviously, the growth of e-commerce, retail wasn't necessarily a favorite sector at that point in commercial real estate. So, financing new retail development was challenging. We're in a different spot today. Now, coming out of the pandemic, really two things happened. One, people missed in-store shopping, so there was this demand of kind of wanting to be together again as a society. But secondly, and probably most importantly, is that retailers have really gravitated towards physical retail. They understand the value of interacting with their customers, and also the intersection of physical retail with their e-commerce platform. So they're using retail, they're using their storefronts, not just for traditional shopping, but also as little mini fulfillment centers. If you think about click and collect and curbside pickup and buy online, ship from the store, all those types of things are using that physical store as a means to support e-commerce sales in addition to traditional shopping. It's really the way to to solve for that last mile. So you have all these, not just new retailers, but established retailers that are opening up, stores and looking for physical footprints. Over the course of the last 3 years, store openings have substantially exceeded store closings on a pretty significant basis, including in the first couple of months of this year. Retail bankruptcies always get a lot of attention, but quite frankly, the number of retail bankruptcies over the course of the last couple of years has been relatively small based on an historic, as compared to historical and pre-pandemic levels. And associated store closings have been pretty small as well associated with that, because there hasn't been that many bankruptcies. And when there are well-known bankruptcies or well-publicized bankruptcies, generally speaking, those stores that close are that space is in high demand. And it's very common that there'll be multiple retailers that want to move into a store, like a former Bed Bath and Beyond space or something
Right.
of that nature, which was a well-known bankruptcy. The demand for that space is pretty significant right now because it's well situated. It's generally in good locations and so forth. And so there's lots of people competing for really limited supply. I don't see that changing anytime in the foreseeable future. Even if today there was a big development boom, it would take a while for that space to get online. But because we're in a more challenging interest rate environment, inflationary environment, the cost of construction is et cetera, is quite high right now, that there isn't a lot of new development that will likely take place until that all kind of gets to a sense of equilibrium. So I think this demand for space and the supply that exists today will kind of be the will be the challenge that the industry will face over the course of the next couple of years, even if we have a some type of recession or a negative impact on consumer spend. I still think you're not going to see any kind of significant deterioration in occupancy. Occupancy levels in the industry, particularly in open air suburban retail. By open air, I mean think of grocery anchored retail, suburban retail. Think of Target, Walmart, Costco anchored centers, things of that
Right.
nature. The occupancy in that space is almost 95%, which is basically full occupancy because you
Right.
always want to have some level of turnover. So, and in the mall sector, it's getting close to 90%, and malls do get a lot of attention because of the size of the property and because they're iconic as it relates to shopping and so forth. And there are some wonderfully well-performing malls. There's some that are more challenged. But as a percentage of the total shopping centers in the U.S. or total amount of retail square footage, they're still, they're a small percentage of it. So demand really high, supply really limited right now.
Wow. Is there a macro trend that's interesting in terms of like the kind of physical spaces that retailers or restaurants are gravitating towards? Because it seems like, how the consumers shop and, how retailers are looking to deliver experiences has gone through like a lot of change over the past few years. And I want to talk about COVID shortly as well. But like with, parking lots now having, curbside pickup and that space being used differently, a lot of retailers are doing the grab and go idea. Are physical spaces getting smaller? Like, are some getting bigger? Like, what are the trends that you're seeing that you're finding interesting and you're like, you know, something to watch out for?
Well, the biggest macro trend is relates to kind of the impact of from work from home, right? So you have a lot more people working from their home, which means suburban retail is generally doing, super well, right? Because people have more free time; they're not commuting into a central business district every day, or certainly less frequently. So that has driven up demand and utilization at suburban retail. So that's a big trend, and that is the vast majority of retail square footage. Urban retail is more challenged, in
Right.
commercial business districts because that depends upon office traffic. So that's number one. Number two is yes, I mean because of the kind of the e-commerce physical retail convergence, retailers are thinking about and developers are thinking about how to utilize space differently. If you're going to if your store is being used for multiple purposes, you might think about how you configure that store. How are you going to ship from stores? You're going to make it easier for people that want to click and collect and get into your store and pick up their goods. You have to have some ability if you're offering curbside pickup and people potentially even to go put it in the trunk of the car.
Right.
That also creates, a need to kind of think about traffic flow within a parking lot. Because if people are stopping to pick something up and put the curbside pickup, how do you make sure the traffic flow continues to flow? So I think there's a whole bunch of things that are, they're property specific and retailer specific as to how they want to address it. But those things are impacting the industry, and they're very kind of tangible. If you think about your own kind of shopping experience, you probably have seen, the impact of those types of things, and they kind of happened very quickly because of COVID accelerated a lot of things that were already beginning, but you kind of took 10 years of change and pushed it into 6 months.
That's right. When you look at what happened during COVID and then how businesses adapted to your point, really, really quickly, what stood out? Like what kind of change maybe you already saw being in the position that you were in, are in. And what are the changes that you think will like just be the norm now over the next 3, 5 years or even longer?
Well, I think first and foremost, you kind of have to take a step back and think of the impact of COVID and what it could have happened, and
Right.
what did happen, and tragically, a number of small businesses and some large businesses obviously got negatively impacted in a pretty significant way, and some went away.
Right.
But generally speaking, the entrepreneurial spirit of whether you're a large established retailer or a restaurant chain or a small one, you really kind of took hold, and people were quite creative as to how to continue to serve their customers to drive sales. And I think the biggest thing was, how do you use technology and a physical footprint in a positive way, in a collaborative way. And if you think of things like that we just take for granted, this is kind of a tangible thing that you might do tonight when you get home. You might go and say, I don't feel like going out to eat. I don't feel like making anything. I'm just going to order DoorDash, or I'm going to order Grubhub, or I'm going to order Postmate or Uber Eats or whatever. Well, just think, we didn't do that. I mean, that existed pre-COVID, but not, I mean, the level of utilization of that grew significantly. And think about all that goes into that. So you have the interface on your smartphone, the app, whether it's using one of those third parties or directly from the restaurant themselves. So there's the whole fulfillment, the whole user interface, customer interface, but there's the back office part of that too, which is that food is being made at a restaurant that's down the street from you.
That's right.
And that restaurant has to have a physical location or it can't fulfill that order, right?
That's right.
And so all of a sudden you're using something that seems so 21st century, which is, an app on your iPhone, to be fulfilled by something that was very 20th century, which is a local restaurant that, cooked your meal and probably is owned by a small local business. That has become so commonplace, but it was just, it existed pre-COVID, but not, I mean, the level of market saturation and pickup has significantly grown. The same thing happens in retail now, right? I mean, you order something on your app and you go pick it up in the store, or they ship it from the store. All those types of things just accelerated so significantly. And I think we've just taken them for granted,
Yeah.
because they make life a lot easier. They're very efficient, but they all have a real estate aspect to them at the back end. I couldn't fulfill that order. I couldn't get your dinner to you tonight in an efficient way in the 15 minutes or 20 minutes that you expect after I hit order now, and it's going to show up at your front door if I didn't have a restaurant down the street from your house.
That's
And
right.
so that's back to that demand for space.
That's right.
To fill that order, I have to have a storefront close to where people live.
That's right. And probably the kitchen design and the kitchen space has to change based on the fact that now you've got in-room dining that you have to serve, but also there's a bunch of folks that are ordering from Uber Eats and DoorDash that now have the same expectations as if they were in your restaurant. Like they still want their food fast and they want it to be hot. And
And you have all the delivery guys going in and out of that storefront constantly. And the same thing happens in retail, right? I order in a traditional product store. I order something online, and that consumer is going to go into that store and they want to get in and out efficiently, while at the same time you have a whole host of people that are doing traditional shopping. So it's, I think the industry's digested it or adjusted fairly well in a rapid period of time, but I think there's a whole element of refinement that's taking place now.
right. Tom, what are your thoughts on consumer expectations? Like when you look at consumer expectations today of the physical built environment that they walk into and what brands have to do to kind of actually bring the consumer into their space, there's a lot of choices. How do you track that and what kind of trends are you seeing on the expectations that consumers have for the brands that they love?
Yeah. Well, look, I think the if to for someone to make the choice to go into a store, right? If they have to make the choice of pushing a button or going into the store. There's multiple reasons that they make that choice.
Right.
But the tried and true things that existed 100 years ago are still the case now. You better have the right merchandise in stock to attract the consumer. If I don't have the right product in stock, why am I? I'm not going to go to the store. And secondly, I better have a good customer experience. Service
Right.
is really, really, really important. And the third is efficiency. It needs to be efficient. I don't want to wait in line for 15 minutes to get checked out. I need to get in and out. So I think those kind of tried and true things as a merchant, as a retailer, that have always been true: customer experience, product availability and selection, efficiency, are still fundamental. So I don't think that will ever change, because
Right.
that's inherent in being a consumer. But I do think that customers, and it kind of goes back to what you said around the restaurant industry, where whether I'm eating in the restaurant or I'm getting it delivered to my house, I still expect the meal to be hot and taste good, and et cetera, et cetera. And it's the same thing when I go, whether I buy online or I buy it in the store. I expect the consumer experience to be consistent and consistent with the brand the brand promise that you're making to me as your customer.
That's right.
And I also expect, if I buy it online, to probably be able to go return it in the store if I want
Exactly.
to, and those types of things. And so retailers are increasingly becoming somewhat agnostic in regards to where the transaction originates and where it gets completed, because they know the customer expects a great experience in both. However, their preference, a retailer's preference, is always to get somebody to go to a store. And there's really two reasons for that. One, while all of us kind of think it's a constitutional right to have free shipping, somebody's actually paying for that, right? Somebody's actually paying for that goods to get delivered to your house. And generally speaking, it's the retailer that pays for it. And so if they can get you to go to the store to either buy it without doing anything online, or to fulfill your online order, they've saved the delivery cost, right? They've saved margin on that, which is quite significant. Secondly, it's an opportunity to interact with a customer, right? And if I interact with a customer, I can make hopefully a good impression with them, and it's more likely they're going to buy more stuff. If they go to the store, every statistical study suggests that they'll buy more than if they bought it online. We've done a whole host of studies around what we call the halo impact, which is the positive relationship between a store and e-commerce sales and vice versa. And our most recent report, Halo 3, if a retailer opens up a store in a trade area, that retailer's sales obviously go up in the store because they opened up the store. They didn't have the store before. But in that trade area, their online sales go up by 6.9% as well. And the average basket size, so total aggregate sales, go up in that area by 6.9%. And then the average basket size, so if I'm a customer and I'm buying something, my average basket size before the store was there and after the store was there for the average customer goes up by about 10%. So
Wow.
it has a hugely positive impact. And of course, the return rates on online sales are about 3 times greater than they are in the store. In other words, online, people return products about 15% of the things that they buy. In the store, they return less than 5% of the things that they buy. So there's a whole host of reasons why retailers want to have that storefront in outside of just traditional shopping. It legitimizes the brand. It's a chance to interact with their customer, but it's also just a heck of a lot more profitable because I shave delivery costs, I save return costs. It's the most efficient and cost-effective way to serve your customers.
That is fascinating. And those are some amazing stats that you just shared. So thank you for doing that. Look, as a show are big proponents of the physical built environment, hence the name of the show as well. And we 100% believe that the physical built environment is one of the best ways you can actually showcase how you think of your consumer. like what you think of the consumer and what kind of experience you want to deliver to the consumer. It is a way in which you can welcome the customer and engage with them. And you could have digital experiences, but ultimately, having that storefront um, does a lot of good for the brand, and clearly the stats show it as well. What are your thoughts on the kind of physical spaces that brands have to now build, or the kind of standards they have to live up to? And I'll ask a follow-up question to that, because as you know, like our audience is a mix of, folks in facilities and construction, design, and so on. And not always do these functions get their due credit, right? They don't necessarily articulate all the things you just said, which is the impact of the physical space to the brand, to the top line, and to the brand promise that brands make to their consumer. When you look at the physical built environment, like what are your thoughts on the importance of the functions that take care of those of that key element of a brand, which is the physical space? And what advice would you have for those that are in those functions to say, here's why I do what I do, and here's the impact we have on the brand overall?
Well, it's critical, right? I mean, you start out with the most basic, which is the structure and the format of the aesthetics, the look of a store. Is it welcoming? Is it inviting? Is it high quality? Without even touching the goods or interacting with a person, people can, create a perception about that brand that store that they're entering into, right? By the way, it's the same thing around the whole shopping center itself, right? The property, the whole property. Is the parking lot clean? Is the
Right.
lawn mowed? Is the trash picked up? All those types of things, create a perception. Is this the kind of place I want to go shop and spend money
That's
at,
right.
right? And so, I think it's super important, because why does somebody make a right turn versus a left turn when they have two competing retail properties across the street from each other?
That's right.
Oftentimes, it's just a motive based upon how they see it and how they perceive it, and then obviously then the word of mouth becomes, and people talk about it. But then once you're in the store, again, cleanliness, orderliness, those types of things. Are the walls painted? Are the walls clean? Are the floors clean? Those types of things are super important. Again, because I'm spending money here. It needs to look like a place that I want to hang out with. And if you can't get those basics done right, then what makes me think that you're going to be honoring the brand promise that I'm rewarding you with my dollars for? So there's all of that. But then I think there's a whole host of things now that are going to that are impacting the industry that we talked about earlier, which is store layout. If you are fulfilling a lot more online orders from your store, that is going to change the way that you lay out a store. You might have uh, a station up front for people to come pick up online orders. You might have more space devoted in the back to ship from the store, depending on the size and sophistication of that retailer. You might have a less space devoted to traditional shopping. You may have more space devoted to traditional shopping if that's not what you're using that particular storefront for. You certainly are going to, if you have curbside pickup and those types of things, you really have to think about, okay, well, how am I going to get those? If I'm a grocer, for example, which there's a lot of that, where people order online and pick it up, and people go and put it in the trunk of your car. How do I make sure my employees can get in and out of the store, have all that stuff picked? How do I just structure the whole layout of the store? Think of Instacart and organizations like that
Right.
have to get in and out and turn that stuff super quickly. Well, I don't want, as a retailer, I don't want to miss out on that sale, right? So I'm going to make sure that I have to now think about not only the person who's going to go and do their shopping themselves, but how do I make sure that the person that's hiring somebody to go do their shopping for them is going to do it efficiently as well, because some other retailer will if I don't do those things. So I think there's a whole host of things that need to be thought through. It depends upon what kind of retailer you are, what products you sell. A high volume grocer has a different set of requirements and things they need to think through than a high end jeweler would, which is, or a high end luxury who's going to sell, a lot less volume on a day to day basis, but the experience of that individual is super, super important. The other thing I would also mention is security is becoming increasingly important too, because there's,
Right.
with retail crime and particularly organized retail crime, making sure customers feel safe, whether that's just having, a visible presence of security on the site or other mechanisms to, security devices and so forth that people can easily observe. I think all those things, are hugely accretive to sales or not if you don't do them right.
As you look at the time that we're in, where there's so many new technologies that are making its way into the restaurant space, the retail space, and just consumer in the lives of consumers, right? Are there any particular ones that excite you? Because you got robotics, you got AI, you got autonomous vehicles. Like, what do you think will stick? What excites you?
Well, I think they all excite me. I think it's hard to know. I look, AI is obviously the most potentially transformative for every industry, retail included. But I think that the challenge with AI is it's hard. It's going to be big and it's going to have a dramatic impact, but it's a little bit like predicting what the internet was going to be like in 1995. You knew there was this big thing happening called the World Wide Web, but you didn't exactly know how it was going to impact the world. And in fact, it impacted the world in a whole host of ways that we couldn't even have imagined back, in those early days of the internet. And even 15 years ago, some of the things that we do now. So I think AI, we're in the early stages, certainly going to impact the industry. Probably one thing will be certain is you'll have a better informed consumer. You'll have a consumer have higher expectations as a result of that, additional information. So the needle keeps, moving up in regards to customer expectations. The one thing I would say, though, that is, and it might be a little counterintuitive, the younger the consumer, the more they value kind of in-store shopping and experience. And I think it might be, in fairness, it's probably a product of really two things. One, because they've grown up with technology their whole life.
Right.
There's a certain escapism, I think, in doing, kind of social interaction type of things.
Yeah.
And the second thing is they're younger and they generally are using cash, or they don't have the kind of credit and availability that as your older consumers do, so they don't shop as much online as a result of that. But we've done a bunch of studies, and Gen Z, by far, their preferred shopping experience is in store versus online. Actually, the older the consumer, baby boomers actually are the highest percentage of shoppers online are baby boomers, not Gen Z. So it's that, again, that might be counterintuitive, but that's in fact the case. I would also say the other thing about demographics is, and this is why I'm bullish on kind of consumer spend in general. The baby boomers were the world's largest generation until the millennials came along, and that's now the largest generation in human history. And the millennials, while they there was a whole conversation around millennials were different than the boomers and different than Gen X, and they were never going to get married, they were never going to buy a home, they were never going to have kids, and then they all started getting married, buying homes, and having kids, and they just did it a little bit later, probably for a variety of reasons, including economic reasons, and I do know one thing: when you have when people get married, buy a home, and they have kids, that's always been good for retail spend, because you buy a lot of stuff. Once you get
Right.
married, you buy a home and you have kids. And so you have this enormous generation that is moving into their prime consumption years, even when you have another big generation that might be moving out of their prime consumption years, but generally living longer than
Yeah.
any other generation previously have, and are spending more as a result of that. Spending a lot more on entertainment and those types of things, which is also good for retail and consumer spend. So the demographics for retail right now are in a pretty good spot, because you have two big generations, millennials and baby boomers, that are kind of in a period of time in their life where one is spending because of big life events,
Right.
particularly raising a family, and another is spending a lot because they're retiring more and they have more free time, and they're spending a lot, maybe not on traditional products, but certainly on entertainment, going out to eat, those types of things that are quite good for retail and consumer spend. So I'm pretty bullish on retail, recognizing there's some challenges in the broader economy that could cause a hiccup, particularly inflation. So
That's fascinating. I mean, if you look at the economy today and you look at unemployment, like really, really low rates, is there more disposable income in the economy right now? Like, are consumers spending more on entertainment and things that are maybe not, necessities, but like, luxury or experiential in nature?
well, I think the most successful retail segment right now would be discount, because of the inflationary environment. So discount department stores and things of that nature are generally doing better than luxury as a broad category. Obviously, there's exceptions in all of that. But if you look at personal savings rates, they have gone down since the height of the pandemic, when personal savings rates were at historic highs because people couldn't go out and spend, and there was a lot of fiscal stimulus in the economy and so forth. You are seeing a rising level of consumer debt and so forth. So those are some troubling signs. But the thing that the consumer has been incredibly resilient through all of this, and in the face of inflation, particularly, and the primary reason is the one that you mentioned, which is unemployment's at historic lows. So when you have a job market when you have a job market this strong and people feel confident in their job, they'll generally continue to spend. If you
Mm.
started to see some erosion in the employment market of significant levels, that would obviously not be good for retail. Our expectation is that retail sales will grow in kind of the 4 to 4.5% range this year, inclusive of F&B. But that would be the risk. The risk would be, does the job market change? That's the consumer's been resilient in the face of higher inflation, and I think that resiliency really goes back to confidence in the employment market. If that
Right.
was to change, then I think then that could impact consumer sentiment for sure.
As you look at the future, over the next 3 to 5 years, what's your outlook in general for, you know, the entire retail space? Um, do you think the supply will go up? Like, are we going to build more physical spaces, or will there be just, will brands have to just figure out how to use existing spaces in more creative ways? What is your outlook?
I think it's a little bit of both. I do think there'll be an increased level of development that will take place over the course of the next 3 to 5 years, but not enough to at least immediately in the short term deal with the lack of supply, because it just takes construction takes a period of time, right?
Right.
And the costs, both the cost of financing and construction costs, wage pressures and so forth. There's a shortage of kind of trade skills in the United States, and so hiring electricians and project managers and so forth that are experienced is quite expensive right now. So I think those things are mitigating factors that will put a cap on how much development can really happen. Getting the financing, the cost of the financing, getting the people to build it, if you can get the financing, how fast they can build it, all those types of things. But I think you'll see an increased interest in doing development, And so I think you will see some new stuff come online. But I do think you're still going to be living in an environment for, a reasonable period of time where the demand for physical space is in excess of the supply of that space. Now, different markets might have different answers. Obviously, growing markets, the demand for space, the southwest of the U.S., Florida, Texas, places where population is growing, you're going to see, the demand for space and the supply of that will be very, very challenged because it's just trying to keep up with population growth. The more mature markets where the population's stable, there's not a tremendous amount of population growth, that won't the pressure won't be quite as high in those environments. But anywhere where there's population growth, there's going to be a lot of demand for space, and it's going to be very difficult to keep up with that demand.
Now, consumers, like you mentioned earlier in the call, their life has changed in the sense that office the office space is no longer a physical building that you have to drive to all the time. It could be your home. Many consumers are in their home and work from home all the time. Some consumers are now having to return back to the office. What is your outlook on how that impacts, you know, retail? And, do you have an eye on that? Like, do you think eventually we're going to get back to pre-pandemic levels and that'll have an impact on how consumers shop? Or do you feel like this is now the new normal and there might be a slight fluctuation, but like this is the new way of working and this is the new way of having to meet the consumer where they are?
Yeah. I mean, I don't know exactly where the office market will land. I do think, it's been 5 years, or close to 5 years,
Right.
4+ years. And, I think there's a stickiness to the way, things have evolved. And so I don't think we're going back to 2019 in regards to people coming 5 days a week into a central office across the entire economy. I think different companies will maybe have that policy and others will be much more flexible. Um, you're seeing the pendulum start to swing some towards back to the office, but I don't think we're going back to 2019. So generally, I would say urban retail will be more challenged as a result of that, because those that depend upon, I should say, central business district retail, not urban, because I'm sitting here in Manhattan and all the Upper East, the Upper West, Chelsea, Tribeca, and so forth, Soho. I mean, they're Lower East, the East Village. I mean, they're booming at the seams because people live there.
Right.
But Midtown's a little more challenged. The financial district's a little more challenged because those are more office centric. San Francisco, L.A. Those central business districts will be more challenged because you're not going to have 5 days a week of people in the office that support those restaurants and retail that are there. And I think that you will have to find the equilibrium. The cost benefit will have to work its way through. Suburban, I think, will continue to be strong as a result. However, the corollary would be people are home more. And so if they're home, they're not in a car traveling or a train traveling to work. They have more free time. And what we found is that means they're going out to the local restaurants for lunch. They're going out to dinner more often. They're going out to shop more often because they have more free time. And so I think suburban retail, also because of millennials buying homes, or at least the demand for homes, is super strong. That I think that will continue. I think you'll see a lot of a more mixed use type of development where you have maybe existing retail where apartment or multifamily is added on, or condos are added on, or suburban office because people are don't want to commute into the central business district. So I think all those things will impact suburban retail in a positive way. So that would be my broad trend. I think suburban retail is going to generally do pretty well. Central business district will be, for the obvious reasons, will be more challenged because there's less people in the office 5 days a week. So
Yeah. Any advice for our audience who works in a function that touches the physical built environment on how they can better prepare to meet the demands of tomorrow's consumer?
I think I think flexibility, because what we do know is that things move really quickly, right? The likely what the next 12 months will hold won't be exactly what we think today. Like, things are there's always new and unexpected things that happen. So I think just having a flexible, sense of being and is super important. But I think the fundamentals are always important.
Yeah.
Making sure that the property, the design, the cleanliness, the layout are functioning effectively. Anything that can reduce the friction on the consumer and create a positive expectation or perception of the consumer is going to be good for physical retail, right? I mean, it just
Right.
is, because that's, that anything that deters from that isn't good. So that would be my number one piece of advice.
This has been a fascinating conversation, Tom. Thank you so much for being here. For folks in our audience who would like to look you up and find you, or look up ICSC, where should they go?
I'm on LinkedIn, obviously. I'm on Twitter at Tom McGee, CEO. ICSC, the same thing at ICSC. We're on LinkedIn, on Instagram, and then just go to ICSC.com. And we have a whole host of information that's available to anyone that goes on our site about the industry and about upcoming events and ways to network.
I love it. Well, with that, I just want to say a huge thank you again, Tom. Really appreciate you being on the show. And for all in our audience, thank you for joining, and I'll see you on the next episode of Elevating Brick and Mortar. Well, that was Tom McGee, President and CEO of ICSC. Tom shared some fascinating insights on consumer behavior, some of which may be counterintuitive and definitely changed my outlook. Tom talks about how consumer expectations are changing, how today discount stores are the ones showing the most growth, and how even with all the demand for space, there's actually a shortage of real estate to fulfill it. One thing is very, very clear. The physical built environment is here to stay and will continue to be key for brands to meet consumers where they are and deliver on their brand promise. With that, I'm your host, Sid Shetty, and I'll see you on the next episode of Elevating Brick and Mortar.
Operations and facilities teams across industries rely on ServiceChannel to ensure that their locations provide the best possible guest experience. Keep customers coming back by lowering downtime and raising your brand standards. Visit ServiceChannel.com to learn more.